Hello everyone, welcome to the Ichimoku charts.com daily analysis for the S&P 500 for Wednesday, March 13th, 2013. Well, a change of trend today, a candle with a lower high and a lower low. Previous day's trading we had a hanging man type pattern, a small black body candle, and if we look at the series of candles that we've seen over the past week and a half, they're all very small bodied candles, and it means that the buyers in the case of prior to the previous day's trading were making a small amount of net bullish progress. For yesterday's trading, the sellers made an amount of net bearish progress, and it did suggest that there was an opportunity for the trend to change. Today we've seen the change of trend, but we've seen the sellers not take control of this market. For the previous day's trading, neither side had control, so all through this trading for the previous couple of weeks we've seen the buyers in control. The opportunity was there for the sellers for the previous day and today, and even though the trend has changed at the downside, they've failed to take control, and the sellers lost commitment down below the 1550 level. We can see for the previous three candles, when the market probed down below that level, for each of the three trading days the sellers have lost commitment. So that is a very important level. We do see a bearish close down below 1550. We could see the market trade substantially lower, perhaps down to around this 1531 level at the previous swing high. By the same token, however, we do have strong resistance at the 1555, 1556 level, and the market has failed to close above there, or just closed above there 2 trading periods ago, and today has failed to close above there. And we can see the small shadow on the top of this candle denoting the buyers losing commitment around that area. So that is a barrier to this market moving forward. So very close by resistance, but close by support. And when we consider the strength that's been in the market over the previous couple of weeks, the fact that we're not seeing strong selling coming into this market at the moment does suggest that the buyers are still the stronger party, and it suggests that there is a greater probability of a breakout to the upside, in line with what we're seeing with the Ichimoku indicators, which are all positive at the moment. So this current candle is quite bullish, even though it's a small bodied candle. But in terms of where the market's closed and the buyers closing with control and the loss of commitment by the buyers, it is suggesting that the breakout may be to the upside when it comes. But we do need to wait until we do see a breakout. So what we'd like to see is a bullish close up above this 1556, 1557 level, or a bearish breakout down below the level around the 1547 area. If we do see the bearish breakout to the downside, then I've mentioned this support around the 1530, 1531 level, and down below there 1523, and where the kitchen centre trading around 1520, 1521. Very strong support down there. To the upside, however, we have a target around this 1576 level, and the market could quickly move to there if we see solid bullishness coming into the market after a breakout. Now, in terms of the Fibonacci extension, and we're examining the relationship of the new first time frame downtrend that the market's in to the previous time the market was trending down, and here we've seen the market test exactly to the 38.2% level and be rejected from there, and we have the short-term dynamics favouring the buyers. So this does suggest that there is a very strong possibility of a change of trend to the upside. So we do need now to be aware of the high of the current candle for a potential higher high and higher low. In terms of the Fibonacci retracement, we're examining the relationship of the first time frame downtrend to the previous time the market was trending up in the first time frame, and here we haven't seen the market test any of the significant levels yet. The 23.6 is the first stop, that's around 1543, and then the more important level at 38.2% is at 1535. So if this market does continue coming off, then they are the areas that we do want to watch for a potential change of trend back to the upside, and we need to coordinate that with what we're reading in the short-term dynamics and basically the balance of buyers and sellers. But at the moment, with this current candle, the buyers have taken control on a downtrend day, so that does suggest that the market may not even trade down to those levels. Now, in terms of Ichimoku, as I've already mentioned, we have a bullish market in all three timeframes. The market's trading up above the cloud, so we're bullish in the long-term timeframe. We're trading above the Kitchens and the pink line, so we're bullish in the short-term, medium-term timeframe, and trading above the Tenkens and the green line here, so bullish in the short-term timeframe. And the Chica span here is above the corresponding price action, so it's confirming all of this bullishness that we're seeing in this market at the moment. Looking at the Kitchens, and that's pretty much pointing flat, so there is a possibility of price action being attracted back towards there. So if we do see the market take out the low of the current candle, then our Fibonacci retracement levels do come into play, and we do need to watch them. And then also the support levels that I've defined this morning. But as I've mentioned, because this market is bullish in all three timeframes, and on this this candle that's established this first time frame downtrend, the fact that we haven't seen the sellers take control of this market does suggest that the breakout will be to the upside. So let's watch the area above where the market's trading at the moment, above this 1556 to 1557 level, and look for a bullish close up above there for a potential trade up to the 1576 area.